So you've been beat up and bashed around in the stock market. I know I have, and more than likely you're tired and worn out from the fact that anytime the stock market seems to get any sort of rally going, it immediately sells off. And when market conditions are like they are now, it's so easy to lose sight of the facts of what is going on. So in today's video, I'm going to keep it pretty simple. I'll be going through the facts of what is going on and why this is actually beneficial to anybody in the stock market right now. Obviously, I'm not a financial advisor. I'm a 20-year-old kid speaking through a microphone to you guys watching this video on YouTube. So please don't take anything I'm about to say as financial advice because it's not meant to be. However, through this video, I hope I can deliver you some peace of mind with what's going on because when market conditions get as rough as they are now, I know it can be very, very tough mentally for any investor in the stock market. Also, if you guys are new here or returning and not yet subscribed, please hit that subscribe button down below so that you won't miss any of my future videos. But with that, let's go ahead and get into this video. So, what are the facts about what's going on now? I already prefaced that it's really difficult to remember what the facts are when the market conditions are as rough as they are now. Well, first of all, one of the main facts is that a lot of stocks right now are down 50 to 80% from their all-time highs. Most of these stocks are high growth names that set all-time highs for their share prices last year in 2021. The second fact of what's going on right now, every single rally we seem to get in the stock market continues to be immediately sold off by the market. The rallies are pointless. Just today, as I'm recording this video, many stocks were up over 5% today, and they finished the day down 2 to 3%. That is a wild swing for any trading day. We had the initial rally today, followed by an immediate sell-off. The third fact of the matter is that market indices are off to one of their worst starts in history. But why is this happening? Certainly there's a catalyst to it. Over half of the stocks in the S&P 500 are setting 52-week lows day after day. Over half the stocks in the NASDAQ are setting 52-week lows day after day. What is the catalyst? You know, some people say that it's the fact interest rates are going to go up, which makes a lot of sense. Demand from consumers can dry up as the interest rate is raised because it costs more to acquire any amount of money, and naturally people will have less money to spend. Interest rate hikes also make it so that it's more expensive to borrow money for companies. Both of those two things affect profitability and future cash flows, and both of those items affect the natural value of any company or stock. Whenever there's more risk to a company's future cash flows, or whenever there's less future cash flows to be attained by investing in a stock, naturally the company's value will fall. So it would make a lot of sense that stock prices would fall as interest rates go up. But I disagree. I disagree that this is why the markets keep crashing and that the markets can't seem to gain any momentum. I disagree. And this is why. According to data which is depicted on the graph to my left, the markets are anticipating between 3 and 5 rate hikes this year in 2022. And when you see that, with all of the FUD going around in the markets right now, 3 to 5 interest rate hikes seems like a lot and it seems like the end of the world. But let's go back to the facts. What are the facts? The facts are that 3 to 5 interest rate hikes would equate to a raise of 75 to 125 basis points on the interest rate. What this means is that more than likely interest rates are going to rise between 0.75% and 1.25% this year in 2022. For simplicity's sake, let's just call it 1%. 1%. Interest rates are going to go up 1% in 2022, and some stocks are being priced like they're going bankrupt based off of this fact. Doesn't make any sense that stocks should be down 50 to 80% because the cost of borrowing is going to go up 1%? 1%! So to be honest with you, I've lied to you today. I actually believe that this is one of the reasons the stock market has crashed and is crashing currently. But I believe that this is just more of a catalyst than the actual reason the markets are crashing. You can't convince me that the cost of money going up 1% this year in 2022 should result in the punishment the stock market is taking right now. You cannot convince me of that. What I really think is happening right now is the market simply needed an excuse to drop and hit the reset button. And this was a perfect excuse. Oh my gosh, 3 to 5 rate hikes this year in 2022, the world is ending. But when you think about it, the interest rate's going to go up 75 to 125 basis points, or 0.75% to 1.25% this year in 2022. This should not be discounting companies' future cash flows so much that their stocks drop 50 to 80%. So honestly, yes, the market needed a reset. Valuations got way out of whack to the upside in 2021. I think we all can admit that. But right now, as I'm sitting here, I've said it before on this channel, but I truly believe that right now we're in the same exact scenario as we were in 2021, just on the other end of the spectrum, where right now valuations are so out of whack to the downside. It makes no sense why these stocks should be punished like they are. The markets need to shake around and adjust every once in a while. It's nothing new. So you might be wondering, okay, Rex, this is a lot of talk. Where is the evidence right now that things are so undervalued? Well, we can point to what has happened every time interest rates have gone up in the past. You would think, interest rates going up, the stock market must have crashed every single time this has happened. But you're wrong. In fact, almost every single time interest rates have gone up, the stock market has also gone up. Let me show you evidence of this. Let's look at the time period of January 1994 to June of 1995. Interest rates roughly went up about 4% in this time period. What did the S&P 500 do? As you can see on the screen, the stock market went up 14% in this time period, just over a year, and the S&P 500 went up 14%. It wasn't even close to being negative during this time period where interest rates were going up. Let's try a different time period now, May of 2004 to October of 2006. During this time span, the S&P 500 went up 25% in just over 2 years. 25%. Again, not even close to being negative. And if you need even more evidence of this, let's look at the most recent time period of November of 2014 until April of 2019. Over this 4.5-year time span, the S&P 500 went up over 40%, which means it averaged 10% per year over this time span. Again, not even close to being red. So why is this? You might think it makes no sense. The world is ending. That's what I've been told on YouTube and CNBC and every single news outlet. The world is ending. This doesn't make sense. Stocks shouldn't go up in time periods like this. Well, here's the news flash for you. Real news. The stock market is always forward-looking. Always forward-looking. For well over a year now, there's been no secret that interest rate increases would have to come at some point in time. So right now, as the stock market is taking a beating, you can know that the market has already priced in as many interest rate hikes as are needed to combat inflation. Now, I'm of the mindset that I think the Fed is not going to have to raise interest rates near as much and not near as quickly as most people do. I believe there's going to be so much natural deflationary pressure on our economy that the Fed is only going to have to raise interest rates about 3 times at 25 basis points apiece. So right now, I can see interest rates, in my personal opinion, I could be completely wrong, going from 0% currently to about 0.75% this year in 2022. If you want more information on my view of why I think there's going to be so much natural deflationary pressure, go watch my most recent video. Click the eye in the top right-hand corner, or there will be a link down below in the description. With that, I'm going to leave this video here. Leave a like down below if you enjoyed this, and don't forget to share this with a friend or a colleague that's also investing in the stock market. I hope I was able to give you a peace of mind during this video, and if you guys are new here or returning and not yet subscribed, I would greatly appreciate you hitting that subscribe button down below. With that, I hope you have a great rest of your day. Peace out.